Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Obviously, the overarching news and market themes of the day is Israel hitting nuclear sites as the world is now awaiting Iran's response to the U.S. Wrecking its nuclear sites in Iran over the weekend as well. All right, joining us now is Dr. Ariel Cohen, Senior Fellow at Atlantic Council, joining us on the latest. How do we rank the probability of an Iranian response?
There will be a response. Unless the Iranian regime collapses, they will be trying to save face. The problem is their options are not great. One, they could try and attack tankers. And we see that the tanker rates, the insurance rates are all going up already. Two, they could try to mine or close the Strait of Hormuz. That will piss off their Chinese customers and endanger their political support from China. Three, we see that Russia is talking, but so far is not getting involved. Why? Because Russia benefits from high oil prices. The higher the prices, the happier Putin is. So what else can they do? They could attack their neighbors. They would be cautious not to attack American bases, it looks like, because they could have attacked. They didn't. The regime is half broken because a lot of generals were taken out, so the decision-making chain is wobbly. But if they attack American bases, U.S. will deliver devastating blows against Iran. If they attack the neighbors, same thing. And here's a question that a lot of people did not ask about the alleged closure of the Strait of Hormuz. The pathway in the strait is through the Omani waters. It's not the Iranian waters. So are they going to endanger their fragile relationships with other Gulf states? Big question mark. Also, they normalized with Saudi Arabia under the Chinese umbrella. China brokered that deal. Are they going to endanger both Saudi and China connections? So the options don't look good for the regime. And what I am worried about, what keeps me up at night, is all that highly enriched uranium. They enriched several hundred kilos to 60%. If the ability to build a deliverable nuclear weapon is destroyed now, what about a dirty bomb? And I think that should be on the table. U.S. and Israel do not put regime change on the table yet, although Trump had his musings about it. But all the boxes need to be changed in terms of ballistic missiles, in terms of enriched uranium, in terms of proxies, and eventually, if we move to an agreement, that should be addressed in the future agreement.
Ariel, is it your opinion that some people are talking about regime change, but that seems far-fetched? Is it your sense that if there were to be regime change in Iran, it would have to come organically from the people?
Absolutely, 100%. It's a country with 3,000+ year history, 90+ million people. It's fractured. You have the Shah, the former Shah supporters. The Crown Prince lives several miles from me here in Potomac, Maryland. We have the far left, the Mujahideen Khalq people. We have the liberals in the regime. And of course, we have IRGC and the mullahs. So different components with diametrically opposed views of Iran's society, the role of religion, the role of women. Don't forget, this is a regime that was executing more people per capita than any other country in the world. This is a regime that a woman could be beaten and killed for not wearing the hijab in a proper way. So a lot of people inside Iran are very unhappy, but this is a totalitarian regime or quasi-totalitarian regime. that picks out dissidents and punishes them and kills them.
Which then makes an internal regime change enormously complicated. All right, Dr. Ariel Cohen, thank you very much. Senior Fellow, Atlantic Council, for the latest in the Middle East and sort of what the actual options may be for Iran and the rest of the world.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, let's turn to the non-market reaction. I mean, when you see the kind of headlines that we saw over the weekend, the impact was estimated to be huge on financial assets, and that has not seemed to play out. Emily Leveille is Chief Investment Officer at New Mexico Climate Investment Center. Broad case, Emily, here. What do you make of what many are saying are a subdued market reaction?
Hi, good morning. Nice to be here. I would agree. I mean, I'm pretty surprised that the markets haven't reacted a lot more forcefully. I think that this attack really expands the range of potential outcomes and creates a lot more potential downside and a lot more risk in markets. And I think it just underscores the strategic need in the United States to have, sources of energy coming from all different sources, because, if we get an escalation from Iran, then we could really see, some pretty big energy shocks, which could really impact inflation and prices all across the world, the U.S. being no exception.
What does the Trump administration mean for your climate investment center, thinking about alternative sources of energy? How are you guys kind of positioning what you do in terms of addressing the challenges of climate change with this new administration?
Yeah, well, it's a good question. It's a tough question. I mean, honestly, green banks, if you're not familiar with what they are, we know that we need an estimated $3.5 trillion of investment into the energy sector in order to transition away from fossil fuels by 2050. And green banks stand in almost every state to really support that acceleration of the energy transition. And, New Mexico is really interesting because we're the second largest producer of oil and gas in the country, but we're also second in wind potential, second in solar potential, third in wind, and sixth in geothermal. And so the potential for real diversification of our economy is really significant. Unfortunately, what the Trump administration is doing through a variety of policies enacted, the most significant of which is the budget bill, the reconciliation bill that's currently going back and forth between the Senate and the House, is it really removes the majority of the incentives that have been in place since 2005 to bring cleaner electrons onto the grid. And so, unfortunately, I think what that means for the whole economy is going to be higher energy prices, less resilience, less manufacturing, fewer jobs, big multiplier effects. Mm-hmm. For us here at the Green Bank, we continue to see a lot of projects that are really interesting and benefit both the low-income communities that we're trying to serve and the broader economy. But it's definitely going to be more challenging. And there are estimates that 50% of the backlog that's in the interconnection queue right now on the grid could be at risk if the bill passes in its current form.
And that's not even taking into account how long that line is to actually get connected to a grid. So if I was looking at individual stocks, is this like a fossil fuel play then at the end of the day, or are there more nuanced ways to play this?
I sort of think of the way the U.S. has been in the last couple of months in the way that I'm used to looking at emerging markets. I invested in emerging markets for almost 10 years. And frankly, I think you've got to skate where the puck is going when it comes to policy. It's really hard to stick your neck out there. That being said, I do think there is maybe some potential in the utility scale solar and wind market. And the reason for that is, at the same time that we're doing all these things to hurt this cheap, easy to get on the grid energy, we're having this big national discussion about how we become AI leaders. And we heard Nextera CEO John Ketchum say last week, if we kill solar and wind, we're going to lose the AI race. And so I do think that there's the potential for, lawmakers to come back to the table to try to support some utility scale, solar plus storage in particular, the administration is still very focused on domestic manufacturers. So I think a name like First Solar might benefit. You've got the, gas turbine manufacturers, GEV and Siemens, but this is a cyclical industry. They've got backlogs to 2032 now, and I just see more downside than upside at this point with the backlogs the way that they are. Then you've got clean, firm power, which is, nuclear, geothermal, and that's all well and good. And I think that does need to be built out. But there aren't that many ways to play it in the market. You can look at the Sprott Uranium Trust. There's a geothermal pure play, Ormat. There's Constellation Energy Group, but it's it's tough out there. I think the reality is that you're going to start to see some people have to come back to the table because solar and storage is the cheapest and fastest way to get new energy onto the grid.
Emily, thanks so much for joining us. Really appreciate it. Emily Leveille, Chief Investment Officer for the New Mexico Climate Investment Center.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Taking a look at the market here, you're looking at Brent off by 1.1% and WTI crude off 1.2%. The question I'm getting is why? Why aren't we higher in prices? So I'm going to ask that question to Amrita Sen. She is founder and director of market intelligence for Energy Aspects. All right, Amrita, what's your answer?
Why are we lower in prices today?
Yeah.
Well, because, again, we haven't seen any actual supply disruptions. We've been saying that, yes, while Iran is threatening to close the Straits of Hormuz, that remains very much the last resort for them, right? Because if they did that, they are really going to get the U.S. involved in a much, much bigger way than they have been so far. Any country that's even neutral towards it will basically become far more kind of angry about the whole situation. And I don't think Iran necessarily wants to attract the ire of the whole world, given how weak the regime is right now. So I think that's a big part of it. The other one is a bit more technical. We've seen most of the crude oil traders trade this via the options market. So when you are short call options, as prices are going up, you actually are taking profits all the way through, right? Because you're kind of selling out of your position. So that's kind of adding to it. I would say, generally speaking, unless Iran actually escalates to the point of disrupting supplies, we are probably not going to see any significant increase in prices from here.
Amrita, is there a consensus about how much geopolitical risk premium is in oil these days?
I don't know about consensus, but I think this one's relatively easy, right? Because we were in the high 60s for Brent. We were already moving higher just based on the fact that fundamentals had been stronger than people expected. But I would say, given where we are now versus where we started when the conflicts kind of headlines started coming in, it's about $10.
What's your question then? So if I'm assuming the question you're getting is why aren't oil prices higher? But what's your question?
For me, the real question becomes the medium term, right? Like, I know the focus for the market is in the Straits of Hormuz, but we know this isn't over yet, right? We know Israel, while kind of, walking a tightrope around this, they are talking about regime change. And what does that mean? A political upheaval has never been associated with a good outcome for oil production, be it Iraq, be it Kuwait, be it Iran in the past, be it Libya. And I do wonder, for the medium-term outlook, do we actually see lower Iranian production over the next couple of years at a time when OPEC Plus will also have less spare capacity because they're bringing back a lot of production? I know this is not the time because of, the focus obviously has to be, does Iran react and close the straits? But for me, that's the more interesting thing, that our long-term oil price is undervalued, given everything that was already going to happen, and now we add Iran to the mix.
How has OPEC been behaving, OPEC Plus? Has it been rational over the last, I don't know, just since maybe, October 7th of last year when things got really, really ratcheted up in the Mideast?
Yeah, it's a great question if they're rational. You have to understand kind of their logic to this, and I think they have been consistent, is what I would say. Saudi Arabia has been saying, look, it needs to be equitable cuts. Everybody needs to be a part of this. And I think that's what they have been doing. But at the same time, they have also been kind of obviously there's been disagreements between OPEC members, with Kazakhstan cheating clearly and some of the others as well, with regards to, what that kind of policy should be. I think that in terms of what's going on with the Middle Eastern conflict, one thing they're very, very clear is they don't want to get drawn into it. They want to make sure that their general infrastructure, not just energy, is protected. And I think they're going to try and be as neutral as possible. And again, this is one of the reasons why I don't think they're going to be surging production if there were to be an Iranian outage, because the last thing they want is to then get attacked, because Iran's going to be like, you're taking advantage of our situation.
Right. Well, speaking of, here's an extremely unfair question. When President Trump tweeted earlier, I want lower oil prices, drill, baby, drill, come on, you guys, I'm watching. Who is the you? I mean, who is he talking to specifically?
I mean, drill, baby, drill refers to the U.S. producers, right? And I mean, I did smile when I saw that, because I was like, yes, you say that, but at the same time, thanks to tariffs, thanks to just kind of broader his economic policies, oil prices are a lot lower. Again, if you take away the $10 geopolitical risk premium, than it has been in the last couple of years. So there is no incentive for their producers to drill. We know, we've talked about this, Alix, you and I, about how gassier the acreage is getting, all of these reasons, right? So drill, baby, drill remains a pipe dream. I think that it's regardless of where the prices are, simply because you are in a situation, at least for the crude oil side of things, just geology is playing its part. We're going to get NGLs, we're going to get gas, but I don't think that's going to necessarily translate into oil production.
All right, Amrita, thank you so much. We appreciate that. Amrita Sen, founder and research director of Market Intelligence, joining us.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
Terry Haynes, founder of Pangea Policy, joining us in the middle of all of this. Terry, let's just start with what we're seeing overseas. Are we too complacent about further action between the U.S., Iran, and Israel, or do you feel like one and done, moving on?
Good morning, Alix. I apparently am the person urging humility in a sea of certainty. I've heard and read a lot of people saying this morning. Well, analysts saying, "Oh, I know exactly how this is going to go. Iran's going to sue for peace, and this will happen, and that happen, and the other happen, and here's the knock-on effects from China and Russia and elsewhere." We're in the phase of this conflict where downside economic risk is heightened, much more heightened than people think, because the possibility for irrational action is much greater at root.
So, Terry,
I could go on. I won't.
No. It was just. It seems like President Trump's policy seemed to change a little, or his outlook seemed to change a little bit from, America first to now, really ratcheting up the stakes in Iran. How do you think his outlook changed?
I got to tell you, Paul, I've never been the guy that thought, I think I said this to you yesterday too, I've never been the guy that thought that this is some sort of a U-turn or anywhere close to it. I think Trump is absolutely right to come in and put take a fresh eye on the nature of the United States commitments and what's most important for America, certainly. But this got taken as withdrawal all over the world, and that was never going to happen. We're in it to our teeth in Taiwan. Our interests in the Middle East are very, very important to the national interest of the United States. And even in a situation like Ukraine, we haven't left. They're not crazy about where we are, but we've given them more weapons. We've signed a minerals deal. We're not gone, and we're not going to be gone either. And now it's very apparent to those for whom it wasn't obvious already that we're going to be in it to stay. And this is a clear situation, I think, where the duties of the president outweigh the preferences of the candidate.
Well, what does in it to stay? In it to stay mean? Like, what does that really entail?
Well, it's we have continued to defend Taiwan and to work our military and economic interests there. Middle East, it's not for nothing that the president made a centerpiece of his early second term a week-long trip to the Middle East with the idea that we're going to be using interconnected economic alliances in part to ring fence the Iranians, and the Iranians are a client state of China, so in essence ring fence China and Russia as well. So that's not new, and it's clear now that the president would like the Europeans to step up to the plate on defense, and you see that from the NATO resolutions that they're finally getting serious about that, but. Even then, we haven't completely withdrawn from Ukraine as was widely assumed in the United States 6 months ago. So we are not melting away from our global responsibilities here by any stretch.
Terry, you mentioned Ukraine. Does the calculus there for Mr. Putin change given the actions of the U.S. in the Middle East over the weekend?
Yeah, well, good news, bad news. The increased price of oil helps him, and if Iran does something that sparks a significant increase in the price of oil, obviously Putin has helped. So that's not good news for Ukraine. But on the other hand, what you have is not only increased resolution demonstrated by the European allies as well as the United States, and the EU, in my estimation, could do an awful lot more than they already are, which is the precious little. But not only that, but you've got a situation here where there's a clear commitment by the president with a clear follow through, and that alone is bad news for Putin. So kind of a mixed bag overall. But I'd say for Russia, it's overall negative.
And before we let you go, Jay Powell testifying to the House tomorrow and the Senate on Wednesday. What do you think the biggest talking point is going to be? Well,
here's the thing. It's I think we all know this. Powell's not going to say anything new, firstly. Secondly, as Mike McKee just reminded the audience, the key here with the Fed is read every word. And he pointed out a number of words in Mickey Bowman's statements that the market isn't reading, for example. But Powell can't say anything new in this testimony, in this twice-year testimony. While Mickey Bowman may talk about the possibility of July, doesn't mean July. Powell's certainly not going to endorse that or anything else. He's speaking for the entire Fed. What's going to happen on Tuesday and Wednesday really is that Congress is going to talk over Powell's head. They know that none of that's going to happen. What markets get out of this is a look forward on the meaning of the tax bill and promises for growth, and also for fiscal, and why that situation's not going to get cleared up anytime soon. With the actors taking their usual stances and their usual marks.
Terry, thanks as always for joining us. Always appreciate getting your perspective there. Terry Haynes, founder of Pangea Policy, joining us from Washington, D.C. Via that Zoom thing.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.